$6,000, which was an increase of $2,726,000 in 2017 for an increase of approximately $852,000. In 2018, the Land Bank's program revenues were primarily comprised of operating grants and contributions totaling $2,172,862 as compared to $939,900 in the previous year, for an increase of approximately $1.2 million or 131%. Total program expenses decreased by approximately $9,263,000 for 2018 as compared to the prior year due to expenses related to the sale of the 640 Temple site in fiscal year 2017. The Land Bank's governmental fund ending balance for fiscal year 2018 was approximately $3,566,000, an increase of $805,000 from the previous year, with the exception of $324,250 in non-spendable inventory. The entire governmental fund balance is unassigned and available for spending at the Land Bank's discretion. However, per Land Bank management, most of this balance is not available for discretionary spending, but instead is already committed to reimburse the county for staff, administrative, and overhead costs. Based on our review, it was brought to our attention that the auditors were not able to obtain sufficient appropriate audit evidence to provide a basis for the audit opinions on the financial statements. Accordingly, they didn't express an opinion. Therefore, it is our recommendation that the Wayne County Land Bank Corporation's audited financial statements for fiscal year ended September 30th, 2018 is forwarded to the Wayne County Commission for receipt and filing.
Thank you. I have a question to my friends in the Land Bank. Why aren't the sales of foreclosed properties recorded at the gross sales price?
I'll take this one.
And could you identify yourself for the record?
Sure. So my name is Daniel Rosenbaum with the Land Bank, and and we've also got Wander Taylor with MMB who works with us on a day-to-day basis. To that question, this is something that we touched on at our last meeting, which is the way that inventory is handled within the Land Bank's system. So what we had done with the auditors in the past, per discussions with the auditors, was we had agreed to valuate inventory at $250, and we had agreed that we were doing regular true-ups of inventory in order to record the inventory that moves through Land Bank ownership. What we've worked with auditors this past year to modify and update that policy. First, we evaluate properties differently depending on how they come into the Land Bank. So not all properties are evaluated at $250, and we're doing more frequent true-ups in order to make sure that there's more consistent checking of or reconciliation between Land Bank inventory. To the question of why not every single property is done individually, it's really a matter of capacity. I don't think any large land bank in Michigan does that, just because if you do a ratio of inventory to staff, it's a pretty high ratio.
So to boil that down, I got several people want to comment, but to boil that down, an apple's not an apple. In other words, until you have discretion to work with the auditors to figure this out, it's like, I know it sounds like the auditors would rather or prefer that you actually, the gross sale prices should be recorded as processed. And it's like, it seems like we could do that in our system. We wouldn't have to go around. Seems like we could get there. And to that point, I guess Mr. Abbo would like to weigh in, and then we got Commissioner Webb.
Through the chair, Daniel, just touching on the chair's question, his question didn't deal with the inventory valuation. It dealt with the processing of transactions. And it seems that the disclaimer that Plant Moran has is just because you're not recording the revenue the gross revenue and cost of sales associated with land bank transactions. And I understand that J.D. Edwards can be problematic in dealing with it, but even if that data was kept offline, so every transaction, you show the sale price, you show the cost of the sale, and recording those transactions on the income statement would probably eliminate the disclaimer, and it wouldn't seem difficult to me that you just put it on an Excel spreadsheet to do that. Again, not the balance sheet transaction, but I'm talking about the income statement transaction.
So we do that internally. We do record all of that. So we use eProperty Plus, which is a database that most land banks use, and we also, in addition to eProperty Plus, have internal redundancies on spreadsheets.
That's inconsistent with what the auditors are saying. They're saying that they're disclaiming because they're saying you don't have those transactions recorded. You just do a true up at the end of the year.
So, go ahead.
Wanda Taylor for NND. This is true. For fiscal year 18, that was true. For fiscal year 19, that is not true. So based on the audit and to do a corrective action plan, we have put in process. We have put in process to record it on a monthly basis now. So we do a reconciliation on a monthly basis.
So I'm not an
Going forward.
I'm not an auditor or an attorney, but what I'm hearing you say is you are going to comply with the wishes of with the auditors.
Correct.
Thank you. And Commissioner Webb.
Thanks. Thank you, Mr. Chair. I just don't understand why you can't record them as you go. So you sell a building, sell 640 Temple, and you can't record its gross. You can't record it just as our fiscal director stated as you go. Why do you have to go back and true up? I mean, it's better than it was. I appreciate that, but I just don't understand why your process. Thank you. Why your process wouldn't be just automatically that you would record it as you go.
Unfortunately, the land bank system does not talk to J.D. Edwards. So currently in EDC, in land bank, it's only myself and I have one other personnel. And we handle the land bank, GWEDC, EDC, block grants. So we don't have enough staff to do it on a daily basis to keep up with their transactions.
Okay, then how about this? Do you provide a report to the commission?
Under certain IGAs, yes. I'm always glad to
I think it would
provide inventory data.
Yeah, I think it would be a really great idea. I would appreciate the information to know when you do your monthly report, when you do your monthly thing, send us an email and let us know what you're doing.
Can I suggest something?
Yeah, sure.
So we report at every regular meeting to our board of properties that we've acquired and properties we've sold since the prior regular meeting. We share that agenda with commission staff, but I'm glad to share that more broadly directly with the commissioners so that you can review and that it's all in there.
How much how much you sold it for, when you sold it, the gross sale, and how often do you have those meetings?
Regular meetings are quarterly.
Quarterly? That's fair enough. For me, I like that.
Okay, I guess to that point, I'm struggling with that because then you're a good guy to work with, but if you leave, then we start this whole mix again. I personally don't like that. I like policy to be consistent, in place, sunshine on it, and we move forward. That way, if something ever happened to you, we wouldn't have to start all over with this, trying to deal with this particular issue. And I guess Mr. Abbo, I'm sorry, Ms. Cora, and then Mr. Abbo have a comments.
I just want to say, based on the fiscal year 2017 into the 18 audit, I think based on Plant Moran's information, we have seen some improvement. It sounds like we've had more improvement since the fiscal year 18 audit. So when Plant Moran comes back to do the 19 audit, they will go back and they will assess the findings that they had in their financial statement audit to see if that corrective action has been put in place. And then also, just to add to that too, we do have our land bank right of first refusal audit probably going to be released within the next 30, 45 days.
Okay. Mr. That's good. Okay, thank you. Go ahead, Dan.
Can I just respond quickly to you,
Sure.
Mr. Chair? What we can do, and I agree with you, I think, practice should be policy and policy should be in writing. So what we'll do is our quarterly disclosures to our board are per written policy. We can update that written policy to include not just kind of indirect, we put it into a board packet and it gets shared with commission staff, but direct, we will also share that report directly with Wayne County Commission.
Thank you very
That's
much.
no problem.
Commissioner Kleen.
Thank you, Mr. Chair. And I think our chief fiscal officer for the commission, you were talking about those reports that you're doing to your board on a monthly basis, I think on the sales that can be shared with us. I think Mr. Abbo needs to see all of that when you send it over.
Sure. So they're quarterly reports, but we're glad to share that with
Okay,
Mr. Abbo.
let's do that, please. You don't have any budget for appropriations from the county?
No, we
You haven't had them, and doesn't look like there's one for 19?
Correct.
You're correct.
Does that mean they've been zero all those years?
Correct.
For the last,
And you're anticipating zero this year, too?
correct.
Because I know you've been looking for ways of raising some dollars for the land bank. And that was the action before auction, was supposed to be able to get some funds for the land bank to operate with. I notice on the financials here, the difference between 17 and 18 seems to be turbo. Is this the last time I'm going to hear the phrase turbo out of the land bank? Are we all done now?
We are. That is the last time. And to your
It's been a long, okay.
Yeah.
So, do your statements reflect at all the income that you received from the 17 action before auction?
So most of what our statements reflect, to be honest, is the closeout of Turbo itself. Turbo had a massive liabilities account a few years ago that was undistinguishable from the rest of our accounts. After going through really every single dollar in that and in the process of closing out Turbo, we recognized most as liability and we paid those out accordingly. But the remainder that we were able to recognize as revenue, that really is where most of our fund balance comes from. It comes from Turbo itself. So that's why it's a fund balance that we see as a precarious fund balance because Turbo is done and we're not going to see those dollars coming back in.
So, right, that's what we said right at the beginning, but as far as revenue from the 17 action before auction, how is that reflected in the 18 statements?
So it is reflected. It's a much smaller number, and I don't.
Some of that will spill over into this year?
That's correct. Most of that revenue is going to be in the. I think there's a line of. Is it miscellaneous receipts?
But you don't have a separate ledger or column or whatever for that?
I think it is miscellaneous receipts. Is that correct?
Yes, it's a miscellaneous receipts roll-up, but in JD Edwards, there is a separate revenue account, so we can reconcile it.
So what do we get for revenue last year from the 17 action before auction?
That I'll have to look and I can send it to you.
I think that would be helpful. As has already been mentioned, we're going to see an audit pretty soon here. That's going to start a lot of discussions, and certainly one of the goals of the program was to help in our otherwise revenue-challenged county to help bolster the land bank with some revenue was part of the idea of that. So I think for the commission to see what the actual effect was, I think we'll learn something in the audit. But I think as we have these discussions going forward, I think getting reports directly from the land bank in terms of how much revenue has been generated as a result of both 17 and 18. I'm sure there's going to be some delay that some of the 17 revenue won't be realized till this year, would be my guess. But I certainly think that those would be valuable numbers for the commission to understand as we go into this larger discussion. And so we have a kind of a complete picture of what and what did not possibly occur. you can't talk to J.D. Edwards? Are we busy right now with the, I forget what we call it, the new bookkeeping system that's coming? You're going to be folded in? Are we working on that right now? Are you going to become a part of the larger accounting system so everybody can talk to everybody?
Hopefully so. I will get with Matthew Dubay to see if they have a module for land bank. That I'm not sure of, but I would check on that and get back to you.
I'd be curious as to whether other component units of the county are being rolled up in the new, because it seems like, and I don't know if Mr. Abbo knows about this yet. He's been, I think, fairly close to the switch over.
Ms. Cora?
I'm not sure about its component units in the new system. Mark may know that.
I am not aware, but we can find that answer.
But she had some comments.
Yeah, I had comments on the revenue pieces.
Yeah.
There's 3 pieces on the revenue that gets recorded, I believe, in land bank. The first one is from the right of first refusal program and the action before auction program. There's the administrative fee that are revenue for the land bank. There's also the 5 years, 50% tax money that gets recorded, captured with the land bank. Then lastly, as far as revenue, even though it's not budgeted from the general fund, with the intergovernmental agreement between the treasurer and the land bank, the treasurer pays land bank a certain dollar amount per parcel that's transferred. Those are the parcels that are not sold at auction. I think around 17, it was about 500,000. Could have been a similar amount in 18, but them are 3 other revenue sources for the land bank.
If I may, Mr. Chair, follow up on that?
Sure.
So there's bits and pieces in the financial statements to put that together.
Yeah.
Are we going to be looking at that in the audit to get to a bottom line number?
As far as the 5 years, 50%, I think Daniel mentioned at the last meeting, it's kind of hard to determine what that
Right.
amount is because some communities are remitting, some communities aren't remitting, so that's a hard number to pin down. And as far as the administrative fee, that will be part of the audit.
Okay, well, I'd like us to get as close to that as we can for that understanding. And I would certainly like to hear back from Mr. Abbo on his opinion as to whether the component units, for now I'm just going to call it the new J.D. Edwards, that I'd certainly like to hear his opinion as to whether they should be rolled up in the new J.D. Edwards. The last question I have, Mr. Chair, was I looked at the findings and said, these look familiar. The third finding I found was curious in the response, and that the response was the land bank investments, you agree with the finding, but you say your investments are pooled with those of the county, and therefore the land bank does not have the ability to provide quarterly investment reports to the governing body. So the recommendation was quarterly investment reports, which you agreed with, and then the answer was, but we can't do it. So what's the deal?
That's true. That's correct.
Yes. Currently, the land bank is in a pool, and it's in a gem pool, which is pooled with the county's cash at the treasurer's office. So the treasurer's office does not provide quarterly reports to the individual units that's pooled in there, so we cannot back it out. So because the treasury office is kind of like a finding on the treasury office. So as long as our funds are pooled with the treasury office and they do not provide quarterly reports, we will have that finding.
Yeah, we put a lot of stuff into the general cash pool. And given that your investments are in the general cash pool, to me, and I'll hear from my chief fiscal officer, to me that's even more reason that there's one bookkeeping system that everything is accounted for, since you are having financial relations with the county as a whole. Perhaps we should be able to track that better, but I won't do it now, but I'll wait to hear from my financial officer on that. Thank you, Mr. Chair. That's what I have.
Commissioner Webb.
Thank you, Mr. Chair. So, since the last 2 audits were not good, the opinion from the auditor from Plant Moran when they did their audit of the land bank, and you know, the fact that this is the only business unit that I've ever, in 11 years on audit, have heard them say they won't even give an opinion on I mean, you know, so it sounds like you're making some positive changes to fix those things, but how confident are you that you'll be in compliance, like, once you go through your correction action plan? Because, see, to me, when you run into policy issues like that, you know, are not of your making, then that's when you have to sit down with the treasurer and say, this is the audit that's saying the land bank doesn't record these things and makes us look bad, so how do we address this policy so that you break us out and that we can comply with corrective action plan from the auditors and not have a no opinion on us, because that looks terrible. I mean, you agree? I mean, that doesn't look good, whether it's, you know what I'm saying? So the status quo is not helping you beat these findings. So in order to address these findings, can you sit down with these different parties, whether it's the treasurer or the county executive's office, to correct the policy around these, break your financials out individually so that you can comply with the findings of the auditors?
Yes, that is the plan, is to sit down with the treasurer's office to see, is it possible for us to break it out? I have met with Matthew DeBay. I will be meeting with him again to see what's the best alternative for us to do that.
Okay, because I just think it's kind of an unfair, I mean, especially if you're getting gigged in your audit for things that, you know what I'm saying, that need to be addressed on from a policy standpoint, then you need to do whatever you need to do to meet the corrective action plan. And we're all hoping, we all love that compliance thing. We love to hear you say, okay, we see what the findings are from the auditors, and these are the things we're going to do to correct it. When are they up for their corrective action plan?
The corrective action, they'll assess the corrective action when Plan Moran comes in to do the fiscal year 19 audit, which I believe they started some preliminary work already. But I wanted to add to that point, correction of finding 1 and 2 will be the key findings that will help alleviate the disclaimer of opinion. The finding number 3, I don't believe really led to the disclaimer of opinion. It's 1 and 2.
Okay.
Which are ones that they can do internally.
Okay.
Correct internally.
Well, that would be a huge step in the right direction, but it would help you too. I mean, you know what I'm saying? Do you understand where I'm going with that? It would help your organization look better, give you greater credibility, especially when it's something that you can't control unless you sit down with the treasurer. So, you know, I would suggest that you do that. Thank you.
And just as a quick add-on, I have also had those conversations with the treasurer's office, and we do agree. We think. I think it's 1 and 2 here, and not 3. Maybe
Yeah.
I think we got it reversed. But findings 1 and 2 are both findings that, on the one hand, they're outside of our control, but on the other hand, I agree with you to the extent we can show people that these findings impact us and try to encourage policy change on their end. That behooves us to do so, and I agree with the approach. Yep.
Thank you.
Yeah, and if I can get macro on this whole issue with the land bank, that's from a previous administration. There was mucho issues. And anyway, so the commission doesn't want to deal with that again. I think it reflected bad on Wayne County. I think when you start land bank, I think it makes some sense. But when you try to, and I know it's certainly improved a lot since those days, I'll leave it at that, but if it's built into policy, it makes it so much easier than if somebody changes or leaves that we don't have to start all over again. And I think probably the frustration with the commissioners is, you get it to where it's improving, you have less findings, and the next thing you know, somebody left or moved, and we start all over again. So if we could bake the stuff into policy, and it really would improve this whole process. But anyway, I've said my little piece, but thank you.
I'll just say I completely agree. 2
Did you
years
write that
ago,
down? Somebody write that down.
completely agree. 2 years ago, we had no policies, or at least we had no board authorized policies. We had some draft procedures, and that was it. Today, we have maybe 25 to 30 substantive major policies that dictate everything from the price we sell property to what we report to our board to how we process inventory. So I completely agree. Absolutely.
Thank you. Anything further, Ms. Cora? Anything from commissioners? Mark?
I'll move.
Okay. Is there a motion to receive and file?
I'll move to receive and file.
I'll
There's
support
support.
that.
Is there any further discussion? All those in favor?
Aye.
All those opposed? Ayes have it. Next item, Mr. Clerk.
Next item 2, excuse me, forwarding a final copy of the Office of Legislative Auditor General's Financial Assessment Limited Review Report for the Greater Wayne County Economic Development Corporation.
Ms. Cora, could you introduce your guest?
Yes, we have guests from the GWEDC, if they could introduce themselves.
Yes, Melanie Markowitz.
Melanie Markowitz, Economic Development.
Welcome.
Wanda Taylor, MNB.
Oh, I've heard of you.
What you have before you is the Greater Wayne County Economic Development Corporation's audited financial statements by Platt Moran, along with our limited review high-level financial assessment. And I will turn it over to Regina. Lee will go through the financial assessment.
Good morning, Regina Lee, Senior Auditor. The Office of Legislative Auditor General received the Greater Wayne County Economic Development Corporation's financial statements for the fiscal year ended September the 30th, 2018 and 2017. We elected to conduct a limited review of their financial statements for fiscal years ending September the 30th, 2018 and 2017. Our limited review of the Greater Wayne County Economic Development Corporation's audited financial statements for the fiscal year ended September the 30th, 2018 and 2017 included, but was not necessarily limited to, a thorough and complete review of the financial statements, limited inquiries of Department of Management and Budget officials, and analytical review procedures. Below, we have summarized some of the key items. The background, which is on page 2. The Greater Wayne County Economic Development Corporation was created on November the 22nd, 2014, as a Michigan public body corporate. It was created through an interlocal agreement between the Economic Development Corporation of the Charter County of Wayne, the EDC of the City of Taylor, and the EDC of the City of Detroit for the purpose of administering economic development programs and functions in Michigan. The Greater Wayne County Economic Development Corporation is governed by the Executive Committee and a 10-member board of directors. The county executive appoints 6 of the board members. The other board members are appointed by the EDC of the City of Detroit, the EDC of the City of Taylor, the EDC of Wayne County, and 1 final board member is appointed by the Wayne County Commission. For financial reporting purposes, the Wayne County Economic Development Corporation is a component unit of the County of Wayne, and though the Wayne County Economic Development Corporation is a separate legal entity, its financial results are included in the county's comprehensive annual financial report as a component unit. And as a component unit, the county is financially accountable. The Greater Wayne County Economic Development Corporation's main source of funding is facility fees of $523,600 from the Wayne County Building Authority issuance of a $7,365,000 Building Authority Revenue Bond Series 2011A for the purpose of the acquisition of a building located in Hamtramck, and B, $7,595,000 Building Authority Revenue Bond Series 2011B, and the proceeds which was to acquire a building in Inkster. The Building Authority charged the seller of the Hamtramck building a facility fee of $257,775 and charged the seller of the Inkster building a facility fee of $265,825. The facility fees were deposited with the Greater Wayne County Economic Development Corporation and were required per the bond documents to be used to grant funds to third parties unrelated to both Greater Wayne County Economic Development and Wayne County, Michigan for economic development purposes. As of September the 30th, 2018 and 2017, $49,608 and $264,075 respectively remains available to be granted. Greater Wayne County Economic Development only revenue for the fiscal year ending September the 30th, 2018 and 2017 its interest income of $1,674 and $3,103 respectively. External audit reports and letters. Planning Moran, the independent internal auditor, stated that the financial statements presented fairly in all material respects the financial position of the governmental activities and general fund of the Greater Wayne County Economic Development Corporation as of September the 30th, 2018. In addition, the changes in its financial position for the year ended were in accordance with accounting principles generally accepted in the United States of America. This type of opinion is issued by an auditor when the financial statements presented are free of material misstatements and are represented fairly in accordance with the generally accepted accounting principles. It is the best type of opinion an entity may receive from an external auditor. A report on internal controls over financial reporting and on compliance and other matters was provided in accordance with generally accepted government auditing standards. The report identified a deficiency in internal controls over financial reporting that is considered a material weakness. Financial results. The Greater Wayne County Economic Development only major fund is the general fund, which serves as the primary operating fund because it accounts for all financial resources used to provide government services other than those specifically assigned to another fund. And basically the primary reason for the change in the net position is due to $213,944 write-off of forgivable loans. Internal controls. The Greater Wayne County Economic Development Corporation's report on internal controls over financial reporting and on compliance and other matters based on the audit of financial statement disclosed a deficiency in internal controls over financial reporting that was considered to be a material weakness, and this is a potential risk exposure. The Greater Wayne County Economic Development Corporation does not have a process in place to timely identify items for cut-off purposes. It was determined that legal services incurred during the year, but not paid as of year end, were not recorded as a liability within the Greater Wayne County Economic Development trial balance. Expenses and accounts payables were understated by $2,320. The external auditors recommended that the Greater Wayne County Economic Development Corporation place additional emphasis on producing complete and accurate financial information. Management agrees with the finding. An appropriate process will be put in place to timely identify items for cutoff purposes for year end. In our conclusion, based on our limited review, nothing came to our attention that caused us to believe that the Greater Wayne County Economic Development Corporation audited financial statements are not presented in conformity with generally accepted accounting principles. It is our recommendation that the OAG's financial assessment limited review report on the Greater Wayne County Economic Development Corporation's financial statements for fiscal year ending September the 30th, 2018 and 2017 be forwarded to the Wayne County Commission for receiving and filing.
Thank you. I have a question. It's like, why aren't annual budgets prepared? And isn't that like a violation of state law?
Thank you, Mr. Chair.
Yeah.
We do have an annual budget prepared for years 2017 and 2018 that was reviewed and approved by the Board of Directors of the GWCADC.
Okay, so they do actually do annual budgets?
Yes, sir.
Thank you. Okay, any further, Commissioners got any further questions? Commissioner Kleen.
Yeah. Thank you, Mr. Chair. And then actually for the Auditor General, I noticed on the first one we looked at with the land bank and now this one, you do a little introduction with a background to the report. Could you start including who the current board members are of these organizations? And if we do have, who's the appointment from, the executive and who gets appointed from the city or whatever, but show the origin of how they were appointed to the board?
Sure. What we could do within our assessment, we'll have an appendix to the report, and within that, who the appointing
Okay.
agency, who they are, and maybe the terms also.
That would be great. Thank you. Thank you, Mr. Chair.
Anything further?
I just got one.
Commissioner Webb.
Thank you.
What is the Economic Development Corporation, outside of selling the public parkland, what are you guys working on now? Do you have any pending economic development deals on on the table right now, or that were going on at the time of this audit?
The GWEDC is independent of the rest of the component units for the Economic Development Corporation.
So you're are you independent of the Economic Development Corporation that's working on the sale of the parkland?
No, I am not.
So you are part of that?
The GWEDC is a component unit related to the general EDC.
Okay, that's
which I work for.
Okay, the first statement you said confused me, but the second statement you said clarified it. So you are a component unit. You are part of that organization. So outside of the sale of public parkland, what are you guys trying to sell? Anything going? Now I'm just curious as an update because we're doing your audit.
All of the updates are generally given by Mr. Cleo Rahal, who is the Director of Economic Development, who could not be here today.
Do you have a current update in writing?
I would have to check with the Director.
Okay, if you could, I would appreciate it. And do outside, I'm not on the Economic Development Committee, so, and the rest of us all care about economic development transactions, so whether you're on the committee or not. So is there a way that a report could be submitted with the commission that are quarterly updates, or, do you have any kind of regular paperwork, minutes from the meetings of the board?
We absolutely do have meetings and minutes of the board, and those can absolutely be provided to the commission.
Would you please have that done so that we can stay on top? Those of us that don't sit on the Economic Development Committee and don't get the regular updates from Mr. Rahal in those meetings can be kept apprised of the activities of the Economic Development Corporation. I'd appreciate it. Thank you.
Felicia?
Good morning. Through the chair, so just as some general background information, and I think a point of clarification, because I'm not sure if I misheard a date that was stated, but the GWEDC was created in 2004. That agreement had an initial term of 10 years. That agreement expired in 2014. The agreement had two options to renew, two 5-year options to renew. That renewal, as far as we could tell when we were looking at the reorg plan, has not taken place. So it's not clear, and I said this during the reorg plan because the GWEDC was mentioned in that the EDC, the Wayne County EDC, which is a part of the GWEDC, did not have a copy of that renewal, and we were not able to locate a copy of that renewal. The administration didn't have that renewal. It doesn't appear that the agreement was ever renewed, so it's not clear, again, how that agreement exists. And then we're talking about financial statements from an agreement for an entity that was created by an interlocal agreement that expired in 2014, and I'm not sure, but since they're here, and we brought that to your attention a few months back when we were looking at the reorg, is there a plan to renew the agreement even though it will be extremely retroactive? Are we just going to continue operating without an actual and effective agreement?
Stated in the interlocal agreement for this organization, there are 3 conditions upon which the agreement may see termination, the first of which to occur. Those 3 conditions are expiration of the second renewal term, which would be the 20 years max for the agreement. 2, when there is 1 participant on the interlocal agreement. Or 3, 3/4 vote of the executive committee to dissolve the organization. Those are the very distinct 3 conditions, first of which to occur, that the organization may be dissolved, including the agreement. There is no mechanism within the interlocal agreement for renewal of these terms. It is the understanding of counsel for this organization that we are currently within the second term. The second term is, I believe, about to start or had just recently began, and where the agreement is still live and active because none of those 3 conditions have been hit.
To that point, Felicia?
And I'm going to make a general comment,
Sure.
and I'm going to take this to beyond the GWEDC agreement, and let's talk about contracts in general, because you deal with contracts every day. So every contract you see has a term. and every contract you see has a termination clause. It's not uncommon for a contract to terminate based on the term of its creation. So if the term of the agreement expires, the agreement goes away. What does the administration do? They come back to this body to either renew that agreement or to extend that agreement because the term has expired, so the agreement is no longer effective. There's also an option to terminate. We have terminated contracts that has nothing to do with the term of the agreement. That is an option that while you're in the contract and the contract is effective, you have options and ways to actually terminate the agreement. So I'm going to disagree, like I did when we talked about the reorg plan, with the opinion offered with regards to the effectiveness of the GWEDC agreement. And again, I relate that back to every contract you've ever seen in the way the county does business on a regular basis. The GWEDC agreement does not state that it automatically renews. Therefore, there needs to be action to actually exercise those renewal options. It's my understanding that those actions have not taken, and that the opinion offered in this case is different from every contract we've ever seen and dealt with within the county.
And I guess to that point, do you agree of what our commission counsel is saying?
To my knowledge, there has not been formal resolutions of renewal. It does not state in the interlocal agreement that they are required, but that the expiration of the second term begins the dissolution of the agreement. I would be happy to provide a written opinion of counsel for the organization to the commission if it would so like.
Actually, we would so like it, and here's the problem: it's whether you like or dislike this body is necessary, and everything has to come in front of this body to vote on contracts, to vote on renewals. And when our commission counsel says we have not been renewed, the people on the EDC do not have the authority to just renew without bringing it in front of this body. And I'm only one of 15, but we as a body vote on those sorts of things, and if it don't come in front of us, I finally got Mr. Kaufman, when he kept saying we have an agreement, to finally say we have a tentative agreement, because this body has to vote on any agreement that the administration does. So you're going to give us a formal opinion and within the next 2 or 3 minutes? And I'm just kidding you.
I'd be happy to do so, Mr. Chair.
Thank you very much. I appreciate that. Moving right along. Commissioner Killeen.
Thank you, Mr. Chair. I believe commission staff already receives the minutes, don't we, from this body?
No, I don't
We don't.
anything from the GWC. No.
How about from the land bank?
There were certain staff members, and I think it was Shanique, who would get the email they sent out with the agenda, not the minutes. We would have to request minutes if we want minutes, but I'll get with Daniel, because I believe that Shanique may have been the only, and maybe Joe, are the only individuals that actually receive those land bank emails, but I'll follow up with Daniel to make sure other staff members get them, since she's no longer here.
And council, let me know if you're going to need an ordinance for all these component units and what they have to report to the commission or not, just so that we're clear as to the reporting or not. It's just, I'm going to
It up a statewide and we did to get the word to and it worked. Discussed it with
I go through. Process. This I want to be able to train them in committee in place. Get off
I have Commissioner Coleman.
because you've had a be uh,
Change the term.
come back for they got years we say then we have a
So I'm going to move.
Support.
Commissioner. Passes. To go. We're going to move because
The authority's financial operations are accounted for in three types of governmental funds: general operating fund, debt service fund, and capital projects fund. The revenues for the authority for fiscal year 2018 is $28,541,000. The fund balance for that same year is $18,430,000. For fiscal year 2017, the revenues were $27,672,000 with a fund balance of approximately $65,674,000. The revenues had an increase of $869,000. This increase is primarily the result of the revenue exceeding expenditures, while the fund balance had a decrease of $47,244,000, primarily due to the transfer of the Gratiot Jail construction and Gratiot sale proceeds to the new criminal justice complex construction fund, $69.1 million, which offset by the sale proceeds of the Gratiot Jail site of $21.4 million. The building authority's net position decreased by $532,179. This change essentially reflects a break even between revenues and expenses. As of September 30th, 2018, the authority's total governmental fund balance was $18.4 million, a decrease of, $47.2 million from the prior year. A significant portion of the fund balance is restricted to indicate that it is not available for new spending because it has already been committed to pay debt service $8.2 million or capital improvement expenses of $9.2 million. The building authority did not prepare a budget for the years ended September 30th, 2018 or 2017. The annual budget should be adopted on a basis consistent with general accepted accounting principles and state law for the general fund and all special revenue funds. State law requires the authority to have its budget in place by October 1. Expenditures in excess of amounts budgeted are a violation of Michigan law. State law permits entities to amend their budgets during the year.
Can we stop there for a quick second? Can you respond as to why we don't have a budget for 2017 and 18?
My understanding when coming into the building authority is that was general practice.
Hit your button.
Oh,
No, it's on there.
it's on.
Oh, it is.
Yeah. Hit your button.
Your hearing
No, I'm
aids
kidding.
don't have batteries, but
Only joking.
Yeah, I'm getting old. Whatever.
This was the general practice when I came into the building authority. I don't know what the historical reason for that is. Matthew Dubé, who's from the Division of Management and Budget, might be able to answer that question clearly, but this was how things were prior.
Well, but things have changed, and whether it's Matthew Dubay or not, you still have to, per state law, do a budget, and there's no budget for 17 and 18. That's a violation of state law. And I know he could clean it up if it's possible, but I don't think he can clean this one up. Welcome, Mr. Dubay.
Matthew Dubay, interim CFO. No, it's true that the building authority did not have budgets in either 17 or 18. I've been working with the person that we have that's working with all the components of the county to make sure that we have budgets for all funds. If my memory serves, and I could be wrong, I believe the operating fund of the building authority had a budget. The debt service fund and the jail construction funds did not have budgets. The jail construction fund not having a budget, there are no expenditures that were coming out of of that fund until we transfer the funds out to the new CJC construction fund, essentially a transfer between two funds for the same general purpose. But the debt service fund certainly should have had a budget. I think it was an oversight, the building authority not realizing that that is a separate fund that needed a separate budget. Just as we, as the county, have separate budgets for our operating funds, debt service funds, special revenue funds, and so on and so forth.
So you agree they broke the law, right? State law.
I believe that it is a violation of state law to not have a budget for a fund, and I believe that we've not corrected that issue.
You say you haven't, or you will?
I believe we have for 19.
Oh, okay. Well, we're moving in the right direction because of Matthew Dubay. I appreciate that. He does a great job. And to that point, Commissioner Webb.
Yeah, just in the last, what you just read, the auditor just read as it relates to the $8.2 million in debt service and the capital improvement expenses of $9.2 million. Are these associated with the Criminal Justice Center? I mean, it says as of September 30th, 2018, the authority's total government balance was $18.4 million, a decrease of $47.2 from the prior year. A significant portion of the fund balance is restricted to indicate that it's not available for new spending because it's already been committed to pay debt service. Is that the debt service on the former jail bonds or capital improvement expenses? Is that the debt service on the current Criminal Justice Center bonds?
I believe that's debt service on the prior bond issuance, the $200 million that we have outstanding.
Okay, that's the debt service one.
Correct.
Okay, that's what I said. And then the capital improvement expenses of $9.2 million, is that associated with the building of the Criminal Justice Center?
I do not have an answer for that, and I can get back to you on that one because I don't have a clear answer on what the $9.2 million is from.
We can go back to the accounting records and look up the detail of what those specific expenditures were.
Do you have any indication?
No, because this would have been Plan Moran, so it would be within their work papers.
I see, okay. All right, if you could get us that answer, I would appreciate it. So.
And I have a question of the Auditor General. Why do we allow a part of this county to not have a budget for 2 years? And I appreciate what they're doing now with management budget. They're going to have a budget for 19. But it's just like we hit the restart button and it's Wayne County and we go over. I personally don't think they should have that discretion. And somebody, if you break state laws, somebody should be held accountable. And so how do we fix that?
That would be an answer, I believe, for Felicia. It could be maybe go into an ordinance for component units.
Well, speaking of that, we got a new ordinance coming up today under government ops, so thank you very much.
Yeah.
Commissioner Kling.
Yeah, thank you, Mr. Chair. I'm going to beat this horse just for a little while longer. Do we know if there were budgets previous, going back 10 years? Things been in existence since 61.
From my recollection, this has been a finding for several years.
That's my recollection of it as well. Mm-hmm. I can't believe that all the smart folks that proposed this and enacted this back in 61 failed to realize that budgets were part of what was necessary when you create this. And What's your official job title, Mr. Kelly? I'm sorry.
Director of Capital Development and Building Administration.
For what department?
Well, we were part of Management and Budget, and since the reorg, we are now actually under the Economic Development Corporation. We're the division now.
And you have legal counsel, right, from Corporation Counsel?
So for the Building Authority, this is largely sort of led by Corporation Counsel.
You don't hire any separate outside?
I believe there is a separate outside counsel, but I'm not involved.
Well, what I'm getting at here is the attorney should know that this is illegal and a legal requirement is what I want to say. And, it doesn't warm my heart to say, well, it wasn't done before I got here. And this is all public dollars. And as we've seen with the other component units, and economic development and the dollars that flow through there can be a little interesting from time to time at the county, the city, the state, and the federal level. So I think accountability for those dollars is absolutely what we do, I think, as a government, and to really be able to track and know what those dollars are and how they're being moved around. Now we're talking if we get rid of the GWEDC, that funds have to go somewhere. So I'm just looking for the public accountability, and I certainly hope that we don't discuss this again next year. But I want to underscore, because it has been a finding for, and then I get them confused. Is it this component unit or that component unit didn't come up with budgets? I think it's a number of them. So hopefully we don't talk about this ever again, as they say in the movies or whatever.
I am sympathetic to your point. I'm not involved in the day-to-day operations of this entity. I'm pretty much just standing in today for Corporation Counsel, so I can't speak for them and why these decisions were made prior.
Well, and the only point I'm making, Mr. Kelly, is that worries me.
Yeah.
Right? That there are things going on, and so then it's like, well, okay. And I'm not trying to hang you out to dry or anything, but I'm just saying, who's minding the ship, right? And again, with these economic development entities, it's good to know who's minding the ship and that we've dotted all our I's and all that kind of stuff. So it just concerns me that there's a little, I'll call it slack for a better term, a little slack in operations.
I'm sure Corporation Counsel would probably have a better answer for these questions.
And I'm looking forward to it.
Yeah, I wish I had them for you. Sorry.
Yeah, thank you. Thank you, Mr. Chair.
Commissioner Webb.
Thank you, Mr. Chair. So while we're talking about the budget and the debt service and expenses as it relates to the Criminal Justice Center, the Gratiot Avenue unfinished jail property was sold for $21.4 million, and the funds were transferred to the county. Specifically, how were these funds used to offset the cost of the new Criminal Justice Center?
The new Criminal Justice Center actually has its own fund with separate accounting. That $21.4 million was moved to U.S. Bank, along with all of the bond proceeds and the unspent proceeds from the old jail. And those were all at U.S. Bank, and they are being spent for construction billings that we received from ROC. So as they're building the building, our owner's representative validates the drawdown requests to make sure that the expenditures are correct and proper and complete, and that the work was performed. They're on site. They have eyes on the project every day. And so when we get the drawdown requests, then we process them for payment from those different buckets. So so part of those payments would come from that $21.4 million.
So the entire $21.4 million was put in U.S. Bank?
Yes.
And then used to pay the bills as you get them on the Criminal Justice Center in combination with other funding?
Correct.
Okay. Thank you.
Is there anything further?
They're just going to wrap it up on this one.
All right.
It is our recommendation that the OAG's Financial Assessment Limited Review Report on the Wayne County Building Authority's financial statements for fiscal year ended September 30th, 2018, be forwarded to the Wayne County Commission for receipt and filing.
Okay.
Move approval.
It's been moved. Supported. Any further discussion? All those in favor? Aye. All those opposed? Ayes have it. Next item, Mr. Clerk.
Next item 2, forwarding a copy of the Office of Legislative Auditor General's Financial Assessment Limited Review Report for the Wayne County Sewage Disposal Systems.
We have representatives from DPS here, if they could join us at the table. But I do have a question for Matthew before we get started. Have the financial statements been officially forwarded to the commission on a DAF?
The sewer statement,
All 4 of them. I don't think we've seen any of them come through.
or any of the component unit ones?
Yep.
I would have to check
Okay.
that. I'm not sure off the top of my head if they were or not.
Okay. Guests could introduce themselves.
Patrick Cullen. Got to think about my titles. Division Director, Land Resource Management Division, Department of Public Services, and Interim Deputy Drain Commissioner.
Hi, my name is Elizabeth Barrera. I'm the Assistant Finance Director for ESG and DPS. Environmental Services Group is part of Department of Public Services.
I'm going to turn this one over to Andrew Ray, and he'll go through the high-level presentation.
Good morning. Andrew Ray, Principal Senior Auditor. The Independent External Auditor's Report completed by Plant Moran indicated that the information contained in the fiscal year 2018 financial report is fairly stated in all material respects in relation to the basic financial statements as a whole for the sewage disposal systems as of September 30th, 2018. The financial highlights in the OAG's assessment can be found on page 3. Total assets for fiscal year 2018 decreased by $309.1 million. Total liabilities for fiscal year 2018 decreased by $127.9 million. And the total net position for fiscal year 2018 decreased by $181.9 million. The identified decreases are primarily due to the sale of the Northeast and Downriver sewage disposal systems. Page 4 of the financial assessment highlights the subsequent events, which are the sale of the sewage systems. The first is the Northeast Sewage Disposal System, or NESDS. On September 27, 2018, the Southeast Macomb Sanitary District, SEMSD, purchased the Northeast Sewage Disposal System for $6,741,007. This amount is comprised of $2,741,007 for a transfer fee and $4 million for pension and other post-employment benefit liabilities that the county retained. The parties agreed that any future payments received by Wayne County from any customers on the NESDS will be returned to the customer, and notice of such payment will be sent via email to SEMSD representatives. The Southeast Macomb Sanitary District will be responsible for obtaining such payments from all customers regardless of the date of service. The parties also agreed that the county will retain $250,000 in an account for making payments to vendors for any services provided prior to the transfer of the NESDS. The county was to return any unused portion of the escrowed funds to SEMSD no later than January 1st, 2019. The county will not be making any further payments regarding services from the Great Lakes Water Authority for the month of September 2018, or any invoices, known or unknown, from a governmental entity regarding any necessary payments. Such invoices and notices will be forwarded to SEMSD for direct payments. The second sale was the Downriver Sewage Disposal System, or DSDS. On September 27, 2018, the Downriver Utility Wastewater Authority purchased the Downriver Sewage Disposal System from Wayne County for a total sale price of $57.5 million, $54 million received in cash, and $3.5 million through a subordinated bond delivered at closing, payable not later than 5 years after closing. The county transferred all of the assets associated with the DSDS at the time of closing. The county retained $2.5 million in a reserve account for making payments to vendors for any costs as mutually agreed between the county and DUWA. At the time of closing, the county has transferred all of the outstanding debts related to revenue bonds to DUWA, but retained the judgment levy debt amounting to $23 million. This debt is now reflected within the county's governmental activities financial statements. The Downriver Utility Wastewater Authority has assumed the responsibilities associated with the ownership, maintenance, operating, and administration of DSDS, including third-party claims associated with lawsuits. The OAG conclusion, based on our limited review, nothing came to our attention that caused us to believe the financial report, including the audited financial statements of the sewage disposal systems, are not presented in conformity with generally accepted accounting principles. It is our recommendation that the OAG's financial assessment limited review of the sewage disposal system's financial statements for fiscal year ended September 30th, 2018 be forwarded to the Wayne County Commission for receipt and filing.
Okay, we've got several people who'd like to make a comment. Start off with Mr. Abbo.
I didn't actually have a comment on this one. My note to you, Mr. Chairman, referred to capital projects and debt service on the previous discussion.
Oh, okay. I'm sorry. I misunderstood. Commissioner Webb.
Thank you. The Northeast Sewage Disposal System was sold for $6.7 million. How were those proceeds used?
All of that money that came in was split between the Wayne County Employees Retirement System and MERS, the Michigan Employees Retirement System, which handles our investments for OPEB liabilities. That's retiree health care. If memory serves, I believe the split was 90-10, so 90% went to pension and 10% went to health care.
10% went to, I'm sorry.
Health care.
Health care, and 90% went to pension.
Yes.
And so is that the same thing that you did with the $57.5 million from the sale of the downriver sewage disposal, or is that something different?
The split is the same. It's 90-10. The amount of that was sent to the pension and OPEB was just the cash that we received, which is the $54 million. The DUA still owes the county $3.5 million, which they have approximately 4.5 years left to pay. Once they pay that $3.5 million, an assessment will be made of where to send it, whether it goes all to pension, all to OPEB, healthcare, retiree healthcare, or some mix thereof. It'll depend on where we are with funding. If we're over 100% funded in pension, which I doubt in 5 years we would be, but if we were to be heavily funded on the pension side and more significantly underfunded on the OPEB side, we may want to put it more to healthcare. The market does poorly and our pension system takes a hit. We may want to push that 100%. So that assessment will be done when they pay, which we anticipate will be probably the very last minute, 4.5 years from now. We'll have to make that decision.
Sure. And are there any other plans to sell any components of the sewage disposal systems?
I know discussions have been had about Rouge Valley being sold, but I'm not aware of where within any process that is. I know there's been discussion with some local units that are trying to get into an agreement as far as what they want from the potential sale and what we would want from a potential sale, but I don't know how far along in that process we are.
So we are talking about it?
Yes. Okay. There are discussions about removing ourselves from sewer operations in whole and just maintaining our drains and the CSO basins.
Thank you.
Commissioner Coleman.
Thank you, Mr. Chair. I'm sure that we discussed this, and I think I remember a discussion we had, but the employees, are they now employees of the Downriver Sewage?
So most of the employees that work for the systems, both of them, but predominantly downriver, that's where most of our county employees were permanently placed. Many of the frontline folks opted to go to, if you can remind me the name of the firm? Veolia, which is the company, Veolia is the company that operates the sewer system on behalf of the Downriver Utility Wastewater Authority. Most of the employees opted to basically keep their jobs and move to a different employer. Those that chose to stay with the county have found other positions within the county in accordance with their collective bargaining agreements.
Do you know approximately how many people we're talking about? just around, just a guesstimate.
That stayed or went, or?
Both.
We have roughly, I want to say, this is a guesstimate, but right around 20 stayed with the county.
And
Then the rest was more like 40 to 50 that went to work for DUA, or for Veolia on behalf of DUA.
and those that went to work for DUA, is it DUA?
Yeah.
Did they start a new pension system? Are they still on the county's pension system?
For the time that they were county employees, they are part of our pension, just as anyone who's worked for the county who has accrued benefits would be part of our pension system. Assuming that they were on the defined benefit plan, those that may have been on the defined contribution plan, so Plan 5 versus Plan 4. Plan 4, that's different because it's a defined contribution